Morning, everyone. It is July 2nd. We are going ahead and going to do our live training here this morning. So that being said, welcome to Trading Options Network. Very, very excited to be with you as always. But of course, let's go ahead and get into our disclaimer. Everything we discuss here is solely for educational purposes only and is not the opinion of Trading Options Network. And as always, of course, as well, be sure to like, follow, or subscribe on your favorite social media platform. That being said, it's time for me to make an appearance here. Let's go, and boom. Hey guys, what's going on? What's going on? All right, so what do we have going on so far this morning here on July 2nd? As you can see, this is a lot different than yesterday. Nvidia's down, Microsoft is flat, Google is flat, Amazon is flat. So all these big companies that were all green yesterday. I'm going to just turn this on here. Boom, there we go, a little bit more light. All the companies, for the most part, that were big green yesterday, that were keeping the market afloat, are not doing that today, with the exception of one, and that would be Tesla. Tesla at one point was up over 10%. You can see it is by far the greenest thing on here right now. It was kicking butt. I wanted to get into it, honestly, but I'm not going to be chasing this morning. I just watched it go up and up and up and up. It looks like lately, here, let's go ahead and I'm going to open up one new tab here and look at that chart just for fun. All right. So that, I mean, good. Apparently I'm speechless. But good God. This thing just took off. Right here, I mean, you can't get bullish down here. You really can't. If you were a bull down there, you're gambling because if we look at the better part of this year, it's been quite red. I mean, you could argue that maybe it was trying to do a little bit of a reversal right here, but if you were strongly bullish here, again, you were pretty much gambling, and hey, it paid off this time, but I certainly would not have done that. But nonetheless, I mean, it literally went from 180 to 230. What was the high today so far? 231. So I mean, we're talking a $50 gain in a couple of months. But for the most part, I mean, we were on June 11th, not even a month ago, we were at, I'm sorry, I got my numbers mixed up. So yeah, we were well below 180. I mean, we were at 177 on June 17th, 2 weeks ago. So again, that $50 jump, if you were gambling and you had some calls, you made a little bit of money, to say the least. But it'll be fun to see what happens here. But the interesting thing here, Tesla's up 10%. Now I know Tesla doesn't have quite the strength in the S&P as Amazon, Google, Apple, Microsoft, Nvidia, even Facebook or Meta. But nonetheless, I mean, the Tesla has been known to drive the entire market, and it just does not seem to be doing that right now, even though it is up. Again, it was up over 10% at one point, still almost 9%. So it's still cranking for sure. We are seeing a lot of the areas where we were red yesterday are now showing a little bit more green. What this typically means is we can be seeing, you can say it's a reallocation of funds for a lot of investors. So a lot of people might be taking out of their gains from yesterday and putting them into different opportunities today, and hence why some of these bigger companies like Nvidia and Microsoft aren't really doing anything. But a lot of these other smaller companies are. So, we'll see what happens. Going back to the S&P right here, as I mentioned yesterday, we are still in a bull trend. There's no doubt about that. We are still in a bull trend. what looks like we are consolidating. You can call this a pennant or a triangle, whatever you want to call it. It really doesn't matter. It's pretty much means the same thing here. But the question is, which way will it break out? I mean, we are due for a pullback. There's no doubt about that, but that does not mean it's going to happen. We could very easily go up and make new all-time highs. Time will tell. We do have the July 4th holiday here. Got to get a sip of my coffee. It's so good. My wife made it for me this morning. But as I was saying, we could very easily see all-time highs, but we do have the July 4th holiday. Sometimes holidays can bring a lot less trading and a lot less volatility to the market because people are on vacation or whatever, what have you. So we may just see a continued consolidation throughout the week. And then ultimately, maybe starting next week, we'll see the breakout somewhere. And time will tell. Time will tell. All right, so here we got the heat map. Let's go ahead and look for some potential trades. Again, we are in a bull market, so I want to look for a bull to start. As always, we're going to go ahead and check our spiders. Oops, that's the wrong. Oh, no, I did click on the right one. We're going to look at our charts. I think by now, especially after yesterday, we know we have a couple of good sectors. That's the communication services. I know the consumer discretionary. Where is that on here? Gosh, my eyes are getting so freaking bad. Hate it. There we go. Consumer discretionary. We'll start here, actually. And as we can look at this chart, we were bullish, bullish, bullish. We had a bit of a, as the entire market did, by the way, last fall. We had a pullback, and then it's been bullish, bullish, bullish up until beginning of March. And it has been neutral almost since March. I mean, yeah, we did have this pullback here, but it's definitely been range bound. If I go ahead and draw this here, bam. I mean, we've been in this range. Oops, there we go. And again, it's a big range, $15 range, but we've been in that basically for 7 months. Okay. And we could potentially be breaking out of it right now, actually, as we speak. So let's go ahead and get rid of this and just kind of zoom in. All right, so if I go ahead and draw this line, and we already kind of have that dotted line there, but bang. All right, so we could potentially be seeing this breakout in the consumer discretionary sector. So I'm going to go ahead and we're going to look for a bull inside of that sector. So let's go ahead and look at the consumer discretionary. That would be the consumer defensive. I'm sorry, that's consumer cyclical, I believe. I always get them mixed up. Always do. I always have to go back and look. But we do have the consumer discretionary as well as consumer staples. So consumer staples is consumer defensive. Consumer cyclical is the, I don't know why this one has to have both of them in here, but the consumer discretionary is consumer cyclical. So now that we're here, let's go ahead and we'll first start with over $10 and over $2 million in volume. We have 38 opportunities. Let's take a look at them. Let's go ahead and look at some performance here. All right, so ACI, we want bulls. So let's go ahead and flip this. There we go. HIMS. I'm not sure what HIMS is. HIMS and Hers Health had a nice pullback there. 40% on the quarter, 136% in the last 6 months, which is basically the first half of the year. That's massive. Let's just take a look at this chart. Is it something I might be chasing right now? Maybe, maybe not. Let's look at the chart first. Well, I can honestly say I do like the fact that I had this pullback up until here. This was a great pullback. I guarantee you this bar right here, I can pretty much guarantee you. Definitely caused some people to get in, and that is the definition of a bull trap for sure, because the next day we gapped down and it sold off. And from there, it gapped down more. It's been coming back up, but this almost looks like a bearish bounce, okay? Because look what happened today. We went up, and it's been selling off right as it hit that 20-day. So we might see this continue to roll over. So this is definitely not going to be going on our bull watch list. How about KMB, Kimberly-Clark? All right, so obviously we had this big gap up on earnings. It looks like earnings is probably going to be in July, I would guess. Well, we are in July, so that would make sense. But more towards the end of July. So we have some time here before earnings. That's another thing. I don't typically like to be in positions during earnings because, again, you're gambling. Earnings, technical analysis means next to nothing when it comes to earnings. And we are technical traders, so if you want to put a very, very, very small percentage of your portfolio kind of as a fun trade per se, have at it. But I mean, I'm talking if you have a $10,000 account, make a $50 trade, something very small. But that being said, it gapped up on earnings, consolidated for a while, and then it decided to fill that gap, which technically is a good thing. Because look what happened. After we filled that gap, people were like, okay, we filled the gap. Now it's time to really go up for real. So boom, went up, and then we filled this gap. Boom. It looks like right now it's trying to fill another gap, potentially hit down to the 50-day moving average, which is not too far from right now. So I say this is a good one that we can put on our bull watch list. So boom, let's get over here. We're going to go back. Here we have our bull watch list, KMB. There we are. All right. By the way, we have T-Mobile, our trade from yesterday. Let's go ahead and take a look at how that's doing. Well, right now we're down a little bit. We're down about $400, but I'm not too worried about that because we still have 72 cents per contract that will expire worthless in the next couple of days. So that will very easily, if we stay where we're at or move up a little bit, we can very easily go green here. If we do the math, 72 cents times 23. Let's get our handy calculator up over here. There we are. So 23 times 72. We're looking at $1,600. So that will more than overtake that $400. And when we are doing a diagonal, by the way, this is a diagonal spread. It is going to take a little bit of time to come through. Okay, it's not just going to be instantly profitable unless it jumps right away. We weren't looking for that. We were more of a neutral to bullish. We liked the chart setup. If we go ahead and look at the chart, let's take a look at it here. Make sure we're still looking pretty. I really enjoy it. I think it is a good looking chart still. Oop, wrong one. There we go. All right, let's make it just a little bit bigger. We went down, we touched that 20-day moving average, but we did not go through it. In fact, we bounced off of it and we've gone up. We may have started the day gapping down. Again, I'm not worried about that. What I'm worried about, or I shouldn't even say worried, worried is not the right word. What I don't want to see is a break of the trend in the wrong direction. That's when we will have to discuss getting out of the trade. So right now, we're still sitting very, very pretty. As long as we can continue to move sideways and possibly slightly up, we will be just fine. So I'm not worried about this, even in the slightest. So let's go ahead and minimize this. Let's get back over here. So KMB, I'm putting it on the bull watch list for now. Yes, it did break below that 20 today. However, it seems like its pattern is to fill the gap and then go up. fill the gap, and then go up, fill the gap, and then go up. So as long as this fills this gap down around this 136 level, which is, again, it's not too far from doing, if we see a nice green candle, then yeah, this will definitely be a nice opportunity to get it into. Of course, nothing is guaranteed. We don't care about guarantees. We just play the percentages. Colgate. This one has been obviously extremely bullish. The funny thing is I actually had some positions in Colgate earlier in this year, and I got into them at the worst times because, again, you're not going to win every trade. And it was funny. I think it might have been here. It might have been in April. Oops. Where it looked like it wanted to bounce here. Again, I was silly, and I tried to time the bottom. I didn't wait for confirmation. If this, in fact, was it, that's what I would have done. But yeah, I had some positions in Colgate throughout the year where they just did not go my way, even though they were bulls, and it was bullish most of the year. I mean, not most of the year, the entire year with a couple of pullbacks. But again, you're not going to win every trade. Don't expect to win every trade. I hate people that, sell the, get the best trades every single day, blah, blah, blah. But Colgate, nonetheless, I like this. We jumped. We pulled back to the 20. Yeah, we're a little bit below it. I'm not worried about that. The bottom line is it's looking as to be a doji. We have quite a few hours before the end of the day is over. But if tomorrow we get confirmation, you better believe it, I am opening up a bull position for Colgate. So let's get back over here. Bull watch list, CL for Colgate. There we are. Of course, I can go back to my chart. Boom. Come on. Am I on the wrong chart? I am on the wrong chart. I'm on positions. Let's go ahead and get back here. And let's look at our green. Where's our green? There we go. Maximize sell. Colgate Palmolive. Looking sexy. I like it. Oop. Just a little too much. All right. So, again, we get confirmation tomorrow. We might want to open up a position. I guess we wouldn't be able to open it up on Thursday. We could potentially open it up late tomorrow, but possibly Friday at the latest if we get, again, confirmation tomorrow. Now, heck, for all we know, we can get a confirmation today. This doesn't have to end where it's at right now. It could just literally just be bought all day, and then suddenly we have an engulfing candle. It's looking really nice. We can obviously go ahead and open up a position. So, we'll keep an eye on this one, see where we're at later on this afternoon. My guess is based on this little bit of action here so far, we're not probably going to have an engulfing candle today. But again, bull watch list. I like the setup so far. We'll keep an eye on it. All right, let's go ahead and find maybe one bear just in case. We do go ahead and see the market break down out of the bull trend, and maybe we have a deeper pullback. So again, we're going to pull this up. Let's see. Let's just look at the performances here. For the last quarter, materials here has been the weakest, so that's by far the one. For the week, the month, and the quarter, it's been bad. It's looking ugly, so let's go to materials. Sector, basic materials, price over 10, volume over 2 million, gives us 26 possibilities. Click on performance. Performance for the month. ALB. I think we talked about these. Yeah, MP, we actually looked at these yesterday, which makes sense. Obviously, it's only one day apart. It's not like we're going to go from a sector. It's going to go from a bearish sector to a bullish sector overnight. But let's look at a few others here. Maybe we can find a sleeper like, what's tech here? Tech resources. Let's take a look at this chart. And the only reason I'm looking at it is because it did have a little bit of a bounce here. So this has actually been slightly bullish, which again, materials was for a while. But we've definitely been in a bear trend. or we can call it a pullback. Now, is this a reversal or is this a consolidation where we're going to end up going lower? These last few candles are not good for the stock because what happened was we gapped up and moved down, gapped up and moved down. Here we didn't even gap up. We didn't even gap up, and we haven't gone anywhere. So, not to mention throughout this consolidation period, we've had a 20-50 crossover here. So, you know, these are definitely things that we are looking at. This is definitely a good bear setup. I like, again, the fact that, and if we look at the volume too, now the volume has not been up here where we've seen some of these bars. But as we have gapped up and sold off, gapped up and sold off, the volume has been increasing each day. So, to me, a decreasing volume throughout the entire consolidation, but a slight increase in the volume in these days where it gapped up and sold off tells me that this does not want to go higher. Okay? So I like this. Tech is absolutely going to go on our bear watch list. TECK. And don't be surprised if I do send out an alert to make this trade sometime throughout the day, especially if the market starts getting a little bit more red. I mean, the market, as of right now, is not looking bad. It's not looking bad at all for the day. But that does not mean, in fact, let's go ahead. I'm going to clear all those two lines. Let's take a look at the 3-minute chart. Okay. So, again, it's nothing spectacular, obviously. But, you know, we gapped down, and we have gone up, 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 up. And we've had some pullbacks in there that just got bought into. Maybe we're seeing that again. But if this reverses and starts going down, Powell did speak this morning, by the way. He basically said, I like it, but I don't like it. I like it, but I want to like it more. So I think that's one of the reasons why the market shot up right away, because when Powell talks, the market gets crazy. We were expecting that. So we gapped down, shot up, and haven't done much since. So the market is, for the most part, just digesting everything he had said. He did say that he believes in a year from now we'll be in the low to mid twos. That, to me, was actually very confident, in my opinion. I don't personally believe we have the potential to get there, but, you know, compared to Powell, what do I know? I mean, Powell's a very smart guy. He knows what he's looking at. I think that was a very aggressive call. I think that's another reason why the market got excited this morning. And there we go. Okay, the market just took off a little bit here. So we could just be seeing another, pullback here in the daily chart. So in the end, again, we're still obviously in this bull trend until we break out of this triangle below the 20. We still have to be more bullish than bearish. Obviously, there are some very good bear setups. I'm not denying that, but we don't want to get crazy. We don't want to get crazy yet anyways. One that I've been looking at just because I've been keeping an eye on it has been McDonald's. This has been very, very poor as well, as you can see. So I like how it has the little arches here. But I also noticed this morning while I was looking at it, and I will go ahead and put this one on the bear watch list as well, but take a look at this. From here to there, and then from here to there. They're very, very similar setups. I'm going to get rid of the stochastics here, and we're going to change that to the CCI. There we are. Save that. Okay. Now check this out. Let me go ahead and put those rectangles back in. So from here to there, and then from here to there. But take a look at this. right here, we had a crossing below negative 100 on the CCI there. And look what just happened here as well. Okay. We had another cross of the CCI. And not only that, we had a couple of red days here, and then this little doji, a couple red days, and now we're looking to have possibly another doji. So the question is, does history repeat itself? And the rest of this week, we just see, more of a drop? Well, obviously I don't have a crystal ball, but we could potentially see that. So if we do, say tomorrow, if we start selling off similar to what we did over here, then this will be one that we'll want to open up a position in. So let's go ahead and get here. We'll go bear watch list McDonald's. And this is funny because I have a lot more bears than bulls. Let's go find one more bull here. And we'll go outside of the super, super strong sectors. Let's find one that's not quite as strong. Let's see here. Obviously, technology's been kicking butt. Communication services, utilities, consumer discretionary, consumer staples, healthcare, real estate, finance, or financials, industrials, no. All right, so maybe we will stick up with one of these others because a lot of those just aren't looking good. I'm sure we can find some great trades within them. Let's look at communication services. I know that's where we got T-Mobile from, but let's go ahead. Communication services, price over 10, volume over 2 mil. All right, gives us 39. Let's do price over 15. We still have 35. I think we did that yesterday too. Performance. Let's see here. Netflix. I'm not sure what Billy is. B-I-L-A. Billy Inc. Yeah, I'm not liking that one. Look at Roku just taking off here. Zillow, nah. Roblox. Roblox is an interesting one. It can be very, very volatile. But if we take a look at this really quick, we could definitely argue that this was one heck of a triangle here. And it looks like we're wanting to break out. So, you know what? Ding, ding, ding. I'm actually going to open up a trade on this right now. Now, I don't like the fact that seems to almost be coming out. What the heck? It almost seems to be coming out of a bear trend and moving into a bull trend here. So I'm not going to get overly crazy. Oops. All right. But we did just have the 20 cross the 50. Okay, we did just have the 20 cross the 50. Let's go ahead and change one of these. There we go. It is breaking out of that trend. Come on. There it goes. So yeah, I like this. I'll give it a 3. And I like the price target of possibly filling this gap from earnings up to about 39. So let's go ahead and do maybe a 2-week diagonal. I mean, sorry, not a diagonal, sort of a vertical spread. So let's go ahead and pull this one up. So Get out of here. We're going to go ahead and just put it here now. Roblox. Boom. Let's go to trade. Make that blue. And let's look here and see what we can do. We have the 39 here. We have a 37.50. So if we go ahead and do the 37.50, for example, 39 vertical spread, that is going to give us, let's go ahead and get some of these here as well. I like these. 37.50, 39. We'll get about right around 50 cents. So it'll almost be a 50-50 trade. And if we go ahead and make it a 3, that means 3% of our portfolio. So at $200,000, 3% is going to be $6,000. So let's go ahead and make this trade. I like it, 37.50. We're going to buy a vertical. And it's going to be the 37.50, 39. Okay. So it'll be about 56 cents. I think we can probably get it a little bit better. If we do the math, that's going to be 90. We'll call it 91. And the 39 will be 35. So probably get it for about 55. So it just went up to 57. So maybe it's already moving. And at $6,000, excuse me, we're looking at about 105 contracts. Okay, so let's go ahead and make this 105 here. There we go. And the mid's at 57. Let's see if we can get it to 56. Well, heck, we'll even do 55. Let's see if we can get that. I'm going to go ahead and send it. All right, let's come back over to monitor. Has not gone through yet. Okay. So we'll just go ahead and see what happens here. Could, of course, go to working orders right there. And we click that. We can cancel/replace. Let's try 56 cents, see if it can get filled. There we go. Oh, no, that's just the cancellation. So, still nothing. All right, let's try 57. See if we can get filled at 57. So, boom, boom, 57 cents. Do we get green? There's the cancellation. Still no green. All right, what are we? Let's see. Let's try one more time. What's the mid saying? It says the mid is 56. We still haven't gotten filled. Let's just leave it where it's at for now and assume that we do end up getting filled. Because I do like that chart for Roblox. It does look like it wants to break out a little bit more. So we'll see what happens. But nonetheless, you know, there we have it. So we're going to go ahead. We have our T-Mobile. We have our Roblox bulls. Now we might want to put in a bear there sometime soon. We'll see what happens. You know, but there's no reason not to have a bear, even in a bullish market, especially when we don't know which direction it's going to want to go. So there would be no reason not to have a bear. Maybe we can find one later on this afternoon. So, you know, potentially, you know, tech or McDonald's. We'll see what happens. But that being said, I hope you guys enjoyed this morning training. Enjoy the rest of your training.